Good morning. Today I am actually going to go over software training. This is for anybody who is partnered with TaxRight or anybody that is actually using TaxBoss Professional. This will show you basically how to enter general information, the personal information, the W-2s, any type of specific forms that you need to add, as well as any type of like additional credits that you might need to, go in there and add, and how to send out the portal, get signatures, so on and so forth. So let's just jump right into it. Give me a second. Let me make sure I don't have any personal information out here real quick. All right. So what we'll do is we will go through a mock client or a return to show you exactly how to do it. So the first thing you want to do um, is I'll just start from the beginning. First thing you want to do is log in to your workplace. Once you're logged into your workplace, you want to start a new 2025 tax return. And then first thing you want to do is enter the social security number. So we're going to use a mock client. So this will not be someone's social security number, but we will act as if it is. So once you click start return, make sure you get your 7616 consent to use tax return information signed before starting a new tax return. That should be coming when you send out the portal to collect signatures from the client. All right, so first thing they ask you is what is the filing status, which is single, married, filing jointly, married, filing separately, head of household, surviving, qualifying surviving spouse, or a non-resident alien. And if you don't know exactly which the filing status should be, then you can select this button. Normally it says wizard. So I'm not sure exactly why it's not showing that right now. Maybe it just needs to um, collect some more information before actually showing, but you can select the wizard and go through the questions, and it should be able to help you determine which filing status you need to file for your taxpayer. Um, for the, we're actually going to do head of household because this is the most common filing status that you may see when filing taxes. So first thing you want to do is collect the personal information, first name, middle initial, last name. We're going to do client one. If they have a suffix, junior, senior, so on and so forth, you want to select that as well. Date of birth. All this information is generic. So we'll just put associate, warehouse associate. Now, as far as the bottom questions, most of these questions should not be selected. For instance, taxpayer can be claimed as a dependent on someone else's return. If that is selected, then that means that this return is invalid because you cannot be claimed as a dependent on someone else's return, filing your own individual return as well as the head of household status. So taxpayer over age 18, full-time student in eligible education institution. If that applies, select that. Taxpayer is blind. Taxpayer is deceased. Taxpayer wishes to contribute $3 to the presidential election campaign fund, so on and so forth. So you can see that these questions, you would want to make sure that each question does not apply to your taxpayer, but most times, in a common situation, it wouldn't. So then you will want to move down to the address. We're going to do something very plain. Zip code. You could select your zip code and it should put up the city and state. So then resident state as of December 31st of 2025 would be Colorado based off of the zip code that I have provided in the address. So make sure that does match so that you're filing the correct state return as well. Phone number, you enter the phone number in. And then I always make sure I gather the client email as well. So then we'll put taxraytaxes@gmail.com. So this is the invite to the customer portal. I don't send the invite until the end of the process once I know that they actually are filing, so that you're not sending, portal invites to people who are just getting quotes. So I do move on from this, um, directly when it is entered, shown into the system, but I will show you later where it pops back up, and normally that's when I send it. So just make sure that the email is correct, or you can send phone based off of the phone number to send them an invite to the portal. That portal lets them upload any type of documents. That portal also allows them to sign any type of paperwork that you may need. Once you select continue, it's going to ask you, do you have dependents or qualifying persons on your return? Remember, we are doing a head of household return, so you would want to select yes and continue. You would list the first child's name, first, middle, last name, date of birth, their social. All of this will be generic based off of to protect clients' information. Now, check the box if the dependent does not have a social security number, I-10 or A-10. Um, 9 times out of 10, they should have a social security number. So you wouldn't want to check that box. And was the individual a U.S. citizen? You always want to select yes if that applies to the taxpayer situation. And then it also asks the number of months that this person lived in your home during 2025. You always want to select 12. Most times that is what is true to the taxpayer, is that the children have lived, or the dependents have lived with the taxpayer for all 12 months out of 2025. If that, happened to be different, make sure you put the number of months that that dependent was living with the taxpayer. These are also additional questions that you may have to answer, depending on your taxpayer's tax situation. But in most common situations, the answers would not be selected. You'll want to click continue. If you need to add another dependent, you can add another dependent. So it'll ask you the same questions again. Was the individual a U.S. citizen? Yes. Relationship, son, number of months, 12. Child is not disabled, so on and so forth. Continue. Now that you have the dependent children listed, you can click continue. So at this point, you have collected personal information, their name, social security number, their date of birth, address, email, phone number, as well as the dependent information. You can go ahead and go into the income. So depending on this taxpayer situation, if they have W-2s, this is where you would add the W-2. You would just copy the W-2 exactly the way it's shown. You would start with the employer identification number. A lot of this information I'm just making up as we go to protect client information. So then you have the employer identification number. You can list the employer. It'll ask the employer's address and zip code, so on and so forth. Box one is the wages, tips, or other compensations. That's going to be how much they made with that job. So for instance, let's say that this W-2, this person has a W-2 of $8,527. And they have $80 of federal income tax withheld. All this information is going to be on the W-2. So box one, you would just want to enter that information exactly the way it reflects. Box two, You will also want to do the same thing based off of how much federal income tax that they had withheld. Normally, box three, four, five, and six do populate after you enter the wages, so you don't have to worry about anything there. In some cases, the W-2 might have row 12. You might see some of these type of codes like a DD, and then they'll have an amount there. So you would just follow the W-2 exactly the way it shows. If it has, A, you'll put the A and the amount there. If it doesn't have anything, then you don't have to enter anything as well. Box 14 is normally empty. I haven't filled that out. And then row 15 is for your state information. So, being that this person, we are quoting that they lived in Colorado, I believe. We'll put Colorado. On the bottom of the W-2, it'll have the state ID's number, like for that employer, you enter that. It already has the state wages based off of what you entered from box one, but it'll also have an additional amount that you paid in state income tax. There in box 17, you'll enter that. Now, if you have a W-2 that has multiple states on it because maybe they work in a borderline city or state, for instance, Nebraska, Iowa. I know Tennessee and Mississippi is a big one as well. Then if it has multiple states, just add another state. Everything is pretty much very, very easy and self-taught. Now, if you needed to add another W-2, you can click save and enter another one and enter another W-2. So once you start entering income, it'll start calculating the return. Let's say this person actually is self-employed as well. So we'll slide down here. This is all the income documents. So you have your 1099 miscellaneous, NEC, Schedule C, any type of additional documents that you may receive. There may be a 1099-R from a distribution from pensions, annuities, retirements, so on and so forth. You might receive a 1099-G based off of unemployment compensation, and maybe you receive a 1099-G for any type of gambling winnings as well. So these would be the forms that show the income. So let's say this person was self-employed. We would select a Schedule C because that is how you report self-employment is with a profit or loss statement, which is a Schedule C. Now, most of this information is going to be based on the business, but let's say ABC business. Um, Lots of business owners have their employer identification number, business address, so on and so forth. Now, if any of this information they don't have, like they don't have a business name, they don't have an employer identification number, that's completely fine. It's considered a side gig, hobby, whatever the case may be, then you can move on. Um, I do want to actually move that on. Description of business. So this person is an lash technician. Lash tech, sorry. Didn't want to get to spelling things incorrectly. Okay, so you can put the description of business. Most of the time, aesthetics. Let me see. Esthetician, sorry. I believe that should be, you should be able to type in whatever that is and it will pull up the code. So again, for the business type, you want to click here for a list of business codes. You type in whatever they do. So, I mean, Lash Tech wouldn't pull up. So that would have been um, esthetician services, or let me see, it might be exactly what I had listed on there, beauty salons. You hit select, continue, information about your business. There are some questions about the operating of the business you would definitely want to go through with your client, whether it's cash, um, method used to value closing inventory, cost, lower cost of market. Most of the time it's going to be cost, so on and so forth. So these questions you can ask. The good thing about Tax Boss Pro is that it's very user friendly, and as long as you follow the instructions, given to you, then nine times out of 10, you should be able to complete a true and accurate return. All right, so we'll just cancel this. Most of the things that you will jump right into is going to be the income. So let's say this person has made $20,431 off of just doing lashings for the year. They've showed you Cash App receipts, Venmo receipts. They've actually written out a self-employment ledger proving this. Then you will go ahead and enter that income. Make sure you get a copy of the receipts as well as the ledger. That is basically ensuring that you are doing your part as a tax preparer for your client in order to retain these type of documents, as well as if they need them in case of an audit or something of that sort, you will have these on hand. You'll click continue after entering the income. As you can see, the federal refund has went up. Now, if this person has expenses, then you can go into the general expenses column and you can enter accordingly based off of the receipts that's provided to you. Advertising, contract labor, that's like if this person has 1099 employees, exactly how much they paid in that. Um, some other expenses that are, primarily used for small businesses would be maybe legal and professional services, office expenses, rent, lease of equipment, rent or lease of property, repairs, maintenance, supplies, taxes, travel, utilities, meals, etc. So you can, based off of the information provided from the client, you should be able to navigate a Schedule C and make sure that the Schedule C is true and accurate, as well as gathering that information so that you have it on hand if your client needs it. Once you have done that part, you will hit continue. If some expenses are recorded and it changes the refund, then the refund would have changed. Let's see here. You may receive like a Form 7205. If you receive that from the taxpayer, then you would want to select that. But in most cases, when you're just doing a hobby or a side gig or something like that on a Schedule C, you answer as many questions as you can about the business, enter the income, talk with your client, see if they have any general expenses. The expenses do need to be necessary for daily operation. Um, so you're doing that, you're making sure if there is other expenses, like for instance, that's not listed. Maybe you had to pay for a master class in order to um, learn a new skill or something of that sort. You can enter that here. But after you are done constructing your Schedule C, then you will want to hit continue. It will give you a overview. Hey, you made $20,431 based off of the information you entered in the Schedule C. There was no expenses, so this is your net income. Okay, cool. If they have multiple Schedule Cs or businesses, then you can add a Schedule C. Now, I do know, like with the 1099 NEC, it does have to be attached to a Schedule C. So I will show you how to do that real quick. So let's say that they gave you all the information regarding that self-employment where they made that $20,000, but they also received a 1099 NEC. So this would be filled out um, from the um, 1099 NEC. So this information would be listed on there. So we're just going to make this up. This is going to be from Beauty World Supplies or something like that. Um, because they were working with Beauty World. That's who issued their payment, but there was no taxes taken out, so a 1099 NEC most likely was issued. This would be the employer's or the payer's information. So we'll put 45 North First Street in Denver, Colorado. Okay, cool. So that amount was $20,431, right? That's on the NEC. And if it is um a NEC, it does have to be attached to a Schedule C. So you'll be like, continue. Income recorded in NEC is reported as any other business on a Schedule C or farm income on a Schedule F. So of course you'll want to select Schedule C for business income. So you can either create a new Schedule C to report the business or report this income on a Schedule C that's already created, which would have been the Schedule C amount that you've already put there. So you can select that. All right. And let me go here just to make sure it was C. Now you have the payer. That taxpayer is the owner of that NEC, and it is scheduled carried over to that Schedule C. And if you go to the Schedule C, you will see, let me see. Okay, so let me show you something. This is being recorded twice because of me doing the Schedule C first and then going back and adding a 1099. So it should only be one. Let me show you. Okay. So let's say, okay, exactly. So, all right. So once you have carried any type of 1099 NECs to a Schedule C, then you would be complete for that. Once you've added all the income information, then it'll ask you about deductions. Like let's say you have you need to add a child independent care credit or educational credit or a mortgage interest credit. That's where you want to do that here. This is not necessarily used all the time. It depends on your person's tax situation. If you are itemizing their deductions, then you want to use this. The most would be standard deduction filings. So if you do have to use anything under deductions, it most likely will be a credit that you need to add. As far as the child independent credit, you can begin that real quick here. You see the credits that you can apply. Adoption credit. If your taxpayer or family will tell you about this credit, that they would be eligible. If they are, like I said, child independent credit, you just begin that. You would enter either the EIN of the daycare or the social security number of the daycare provider. Either or, doesn't matter. Um, you do need the provider's first and last name, and you will need the address where the care is provided. along with the provider's phone number. Once you have entered that, it will ask you, so of the dependents who receive care, so you will select baby one or little one, the amount paid. Let's say you have a daycare invoice and it shows that they paid $4,000 as a family. So then you will want to put 2,000 for baby one, 2,000 for baby for little one. You'll select continue. It'll show the amount paid. Let me see. The benefits probably, let me see here. Okay. It does depend on the age of the dependents put on the tax return as well, whether or not one would receive any benefits or how much you paid or whatever the case may be, but it is calculated already in there. For this specific situation, there will be zero benefits, and it's probably based off of the ages I put the dependents. And let me make sure that everything is correct here. Let me double check and see if I entered. Okay. Um, so not sure exactly why the benefits are not showing here, but I mean, normally it's calculated already in there. You don't have to worry about it. If you have multiple providers, you can actually add that as well. And it could be honestly because I just made this this social security number. So that could be it as well. But yes, the benefits are normally right there listed. It'll ask you dependent care questions regarding the child care. Did you receive any dependent care benefits from your employer that are not reported in your W-2? No. Or you or your spouse unable to work due to being disabled or enrolled as a full-time student? No. And did you pay any care expenses in 2024 and 2025? No. Depending on the tax situation of the client, you will hit select. Okay, so here's your tax credit amount based off of that. All right, you've added your child dependent care. There's not any other additional credits that you need to add for your client. If these credits do not apply for your client, do not add them. You will know if you need to add these type of credits based off of the forms you receive and your client's tax situation and off of the initial intake. Once you've added that credit, you can click continue. It'll ask you about deductions. Again, boom. It shows that you do not need to add any additional deductions. You'll select continue. It'll ask about other taxes. Most of these are not used on a regular, filing situation. But if you do have a situation, just reach out to your mentor or team, and they will be able to walk you through this. You'll select continue. Payments and estimates, I have not used this as well. As I stated, if you do have a situation, go ahead and reach out to your team and they will make sure that they walk you through this so that this is done properly. But in a common filing situation, you wouldn't use these. So you click continue. Any type of miscellaneous forms, like if you have um, a client that is married and their husband owes child support or something like that, and they want to file an injured spouse allocation, then you would want to use this miscellaneous form. There's really not a lot of additional information. Um, let's see here. I believe you can put the IP pin here. Yes. If there is an identity or IP pin that is provided from the IRS each year for this client due to like some type of identity theft, then that's where you will want to actually select that. would be in that last page of this income. So you select continue, continue, other taxes, continue, any type of additional payments, miscellaneous forms or miscellaneous items you need to do. So miscellaneous, that's where the IRS PIN would be listed if you need to list that for either the taxpayer or the children. It'll be listed there. Um, yeah. So if you have to use that, then that's fine. If not, then you want to select continue. And then you are getting yourself to, it'll ask you about the healthcare. Did you receive a 1095-A? We'll say no. We'll select continue. The states are unavailable at this current time because they're normally not released until like February. So it would normally pull up the state of Colorado for you, so you can make sure that you're completing that return as well. But you will want to hit select. Now, once it has calculated the return, that's amazing, great, but you need to go back and make sure you do your due diligence. Your due diligence is listed in the federal section. And as you can see, these deduction is listed under the deductions part for the earned income credit. That is your due diligence. That is very important. You have to make sure that you are completing that each and every return. Otherwise, you could be in big trouble, as well as the firm that you're working with, so on and so forth. So you have to make sure that you are going back and you are making sure that you are entering your earned income due diligence checklist questions. So was the taxpayer a non-resident for any part of the year? Nope. Is the taxpayer a spouse or qualifying child of another person? No. And did you complete the return based on information for the tax year 2025 provided by the taxpayer or reasonably obtained by you? Yes. Did you interview the taxpayer, ask adequate questions, and document the taxpayer's responses to determine that the taxpayer is eligible to claim the credits or the head of household filing status? Yes. Did you review adequate information to determine that the taxpayer is eligible to claim the credits or the head of household filing status? And in what amount? Yes. Did any information provided by the taxpayer or third party reasonably known to you in connection with preparing the tax return appear to be incorrect, incomplete, or inconsistent? You want to select no, but if you select yes, then I definitely would add preparer notes, basically stating exactly what was a little bit off about this preparation. But in most cases, the answer would be no. So did you satisfy the record retention requirement? You want to select yes. And then in addition to your notes from the interview, list the documents that you relied heavily on. And so in most cases, you want to put unexpired driver's license. In this case, you relied heavily on a W-2. You relied on a 1099 NEC. You also relied on a ledger, Social Security cards, and utility bill to verify that they were for the head of household filing status. So whatever you relied heavily on, go ahead and list that there. Did you ask the taxpayer whether he or she could provide documentation to substantiate eligibility for the amount of the credits and the HOH filing status claim in the return? Yes. Did you ask the taxpayer if any credits were disallowed in the prior year? Yes. Were any of the credits disallowed reduced in a previous year? You want to select no. If the answer is yes, that doesn't necessarily mean you can't file them. There may be an additional form that you need to add with the return in order to try to qualify them again for those credits. So you just want to make sure you're answering these questions that is applicable to your taxpayer. So did you ask adequate questions to prepare a complete and correct Form 1090 Schedule C? You want to select yes. And that's, in reference to asking questions about the business. How do you guys collect money? You see the ledger, so on and so forth. Now it gets down to the qualifying children. Is the child currently or intended to be a qualifying child of any other individual's tax return? These should always be no. Dependent children can only be listed on one tax return. And then here's the earned income questions. Have you determined that this taxpayer is in fact eligible to claim the earned income credit for the number of children for whom the earned income credit is claimed? Yes. Did you explain to the taxpayer that he or she may not claim the earned income credit if the taxpayer has not lived with the child for more than over half the year, even if the taxpayer has supported the child? Yes. That question is for baby dads who's trying to beat their baby mother before filing the children, because the children can only be claimed on one child, and it does not matter if you pay child support to the child all year. The child needs to be living with the person who is claiming the child. So, did you explain to the taxpayers about the rules about claiming the earned income credit when a child is um, a qualifying child of more than one person? And then you will want to select yes, because the tiebreaker rules would apply as follows. Of course, it will be parent over another person. Um, if the parents do not file a joint return together, then and they both basically are qualifying, the child is a qualifying child to both parents, then it would go to the parent with the highest AGI. So basically, these are the steps in order to determine which parent will actually be eligible to claim the earned income credit for these children. And then here's the child tax questions. Does the child reside with the taxpayer who is claiming the CTC or the ATC? Yes. Did you explain to the taxpayer he or she may not claim the CTC or the ACTC if the taxpayer has not lived with the child for more than over the half the year, even if the taxpayer has supported the child, unless the child's custodial parent has released a claim to exemption for the child? Yes. Did you explain to the taxpayer about claiming the CTC, ACTC, ODC if the child of a child of divorced or separated parents? Yes. And the head of household questions. Have you determined that the taxpayer was unmarried or considered unmarried for the last day of the tax year? Yes. Do you certify that all answers in this form, 8867, are true to the best of your knowledge, true and complete? Yes. And they definitely let you know that you need to truthfully and accurately complete this um, in order to make sure that you're doing your due diligence as a paid tax preparer. If you have not complied with all due diligence requires for all credits you claim, you may receive a $635 penalty for each credit for which you have failed to comply. Very cut and dry. Once you have continued that, you have completed that, you can go ahead and add your due diligence notes. Um, Taxpayer provided. I think we put two dependents on here. Two dependents lived with taxpayer all 12 months out the year. W-2, I normally put, I forgot exactly how much it was. Walmart, and I put $80 federally withheld. Self-employment for 3 years. I always ask how long they've been self-employed. 3 years. That's Lash Tech. Taxpayer provided Cash App receipts, Venmo receipts, handwritten receipts. Ledger. I think I've covered everything that we have put. Oh, child care credit. It was 8,000 for two dependents from provider output, provider's name, provider or daycare's name. And I think that's pretty much it. Taxpayer advice, 6,866. refund, taxpayer acknowledged. That's what I do my due diligence notes as. Some people like to add how they were contacted, taxpayer provided, taxpayer contacted tax pro via Facebook Messenger. Provided unexpired driver's license. So this basically covers your butt. These are your due diligence notes. Um, I would definitely make sure that you're doing this on each and every return. You do have as much space as you need. I like to keep them very cut and dry, just to make sure I'm listing all the information, everything that I've done inside of it. Any type of questions that you have to ask your taxpayer, any type of additional information. Let's say that this person says that, you know, child's father kept the child for 1 month out of the year. You might want to put that because let's say, the child's father tries to challenge the credit. Then you will have this, listed in your due diligence notes, so on and so forth. So once all that is completed and you have all these green, you're looking good, you click continue. Any type of miscellaneous statement that you need to, put there. I don't necessarily like, maybe you want to put that situation about, the child's father here, or whatever the case may be, but you'll hit continue. It'll bring you past. Now, your basic information, federal information, health insurance, state section. Remember, the states are not available. When they are, you should be able to go back into this return and click state section, add the state, and then a lot of the information that you've entered will be carried over to the state section. All you have to do is select their residency, and then their state return should be completed as well. Unless you do have any additional credits that you need to add within that state return, which the past year I did have to do that for a lot of my clients. So just make sure that whatever type of credits that your clients are eligible for, that you are double checking and making sure so that you're adding this before you're submitting your state. So now we are at your e-file, your summary print, your e-file. So this is going to be the returns details. This is how you would select how they will receive their tax return. So being that, um, let's see here, there normally would be a bank app here. The bank apps are not available yet. So it'll say something like Refundo here, and you'll do Refundo direct deposit. That means that you are attaching that bank app to um, the return so that you're able to capture those tax fees directly from the direct deposit from the return. Sorry about that. So you will always want to make sure that you're selecting that bank direct deposit so that you're able to capture those fees. If you select eFile, you are doing it directly from software to the IRS. So they will receive a paper check from the IRS, which those are not available anymore. They're only doing direct deposits. So this will be a direct deposit from the IRS. This will be a paper return, a return that you actually need to print out and email, send via mail to the IRS. This will be a paper return with a direct deposit. Do not use these. You always want to e-file as well as you always want to use your bank product. So you should have the bank product listed up here with direct deposit or the bank product listed up here with the paper check as well. You will always want to select that. Once you are done doing that, you can go to the, so we'll just do this just to get past. It'll show you the price of what's being charged. You can add Refundo Audit Pros. You can add that too. Great. Once you have the fee summary, you can continue. This is where you'll collect signatures. So everything, you see this where it shows the taxpayer electronic signature and it is blank. This is where you want to send for it out. So it shows a federal return, exactly how you're going to receive that paper. I mean, the money. So it says e-file paper check. That will be IRS paper check. Basically, state return is not attached because it is not available yet. It has all the information. This is where you would send an invite to the portal. So as I stated, depending on whether or not they downloaded the app, if they download the app, you should be able to click Taxes to Go and send it directly through the app. If they have not downloaded the app or they did not send the information through the app, it'll have a customer portal. You can have email or text. So if email, you send the invite like that, great. They'll receive an email to that email in order to go in there. Great. Um, if you need to send it via text, you send the phone number to that, and you can send the invite that way as well. Now you have to send the document in order for them to sign it. Tax return sent through the portal. Once you have sent the portal, you sent the invite and you sent the tax return, this right here, you need to save. If you are a P10 holder, you will not be able to transmit, so you need to mark the return ready to review. Once you do that, then it would be sent over to the ERO who will overlook the return, make sure everything looks good, and you'll be able to send the return out. So that's whether it approved or failed, whatever the case may be. We're not going to send this out. So we're just going to save and exit. Once you send that portal and that information, then that would allow them to go in there, sign the documents. You will receive a notification in your right-hand corner that the documents have been signed. Once you select, you go in there, make sure that that portion up there at the top where it had the taxpayer signature is completed with a signature. Then you can go ahead, mark the return for review, send it over to your URO so they can make sure that everything is good to go, and you can get that filed. So that is the gist of using the software as a P10 holder. If you have any additional questions, please feel free to reach out to me so we can go into more depth. But this is how you are going to get your clients entered into the system, okay? If, like I stated, if you guys have any additional questions, please feel free to give me a call, email, message, anything. You can actually comment in the community, any type of questions, and we can go over them as well. So I'm gonna go ahead and stop sharing at this point. I do appreciate your time. As I stated, this is the official software training for Tax Boss Pro for the 2025 tax season. If you have any additional questions, email me, reach out to me, or comment on the community so that we can get your questions answered, okay? So anybody taking the course, the tax boss course, and they have the tax boss professional software needs to actually look at this video and let me know what you think. Thanks. Bye.